coming out of northeast London, where a man with a sword has allegedly stabbed several people near the London Tube station. In terms of what we know so far at the moment is that this is a man with a sword. He has been arrested after an attack on members of the public and police officers as well. If we go specifically to the area, this is Hainault Tube station area in East London. According to the police statements, 5 people have been taken to the hospital after the incident, which has been corroborated by the London ambulance services as well. The Metropolitan Police said that officers were initially called to reports of a vehicle being driven into a house in the Thurlow Gardens. The force said that there were reports of people being stabbed during this particular incident, and then this picture that you can see on your screens as well, where a man brandishes a large sword as well. A 36-year-old man was arrested at the scene and is in custody, according to the police. The Metropolitan Police also said that it is not looking for anyone else in this connection. They're saying it's not terror related. But meanwhile, James Cleverly, essentially the Home Department, is saying that he's regularly being updated. Rishi Sunak, the Prime Minister, is saying that this is a shocking incident. His thoughts are with those affected and with their families. He also went on to say that, "I'd like to thank the emergency services for their ongoing response." So Rishi Sunak apparently shocked. This is that particular car near the Hainault police station and tube station area that you can see. Earlier, people suspected it to be a car-related accident, but apparently there was a man who brandished a sword. 5 people have been taken to the hospital, attacked members of the police and members of local public as well. Various drone footages have now surfaced as well. Various correspondents from local UK channels from the United Kingdom have reported saying that it's really traumatizing moment for the people, especially the local people. Various social media handles have opened up pages that are allowing people to tell how they're dealing with this ordeal at the moment. Police is investigating whether the Hainault attack suspect had history of mental ill health or not. This is what we're tracking at the moment. 5 people getting treated at nearby hospitals. This is Hainault area in East London, where a man brandished a sword and went on a stabbing spree. We're slipping into a break. Lots more continues on the other side.
Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we bring to you the lowdown of the day's action on the Lal Street. And Indian markets, they ended in the red after scaling a fresh record high on Tuesday. Now we kicked off the session with modest gains amid a favourable handover from global equities. From there on, the trend mostly remained bullish and Nifty continued moving higher throughout the session, even scaling a fresh record high in the process for the very first time since April 10. However, as has been the case in the recent times, the afternoon trading phenomenon that kicked in and we witnessed a broad-based sell-off in the last hour of trading. The headliner not only paired all gains but ended in the red as well. Nifty fell about 179 points from its record level of about 22,783 and about 38 points for the day to end marginally above the 22,600 level. The next level of support for the index now comes in at around 22,562, which is nothing but the 78.6% retracement level of that entire fall from record high, the previous record high of 22,775 to the recent low of 21,777. Now we had even put out this as a key support for the index both yesterday and today, and very interestingly today's low also coincided with this level, so watch out for that. 22,562 will be your first level of support. If we break that, 22,443, which is the 20-day moving average, and 22,394, which is nothing but the 61.8% retracement level, that those two levels could come into play. On the upside, the first level to take out for the index now is the new record high, which is again 22,783. Followed by 23,047, which is again nothing but the 127.2% Fibonacci extension level. Moving on, the 30-share Sensex also came within touching distance of its record high, but in this correction that we witnessed in the last hour, it dropped by about 170 points from those levels to end at about 74,500 mark. The broader markets, which too scaled fresh peaks in Tuesday's trade, also paired gains. The mid-cap index ended about 0.07% higher, extending its winning run to 7 sessions now. Meanwhile, the small-cap index ended marginally lower, snapping out of its 6-day winning run. Nifty Bank, remember, Nifty Bank has been a driver for the markets lately. In fact, it was Nifty Bank that was able to, drive that entire movement for Nifty in yesterday's session. It witnessed one of its best sessions in 24, in fact its best session since December of 2023. So we came within a touching distance of 50,000. We were just about 20-21 points shy from that 50,000 milestone. Could not take that out in that last hour of correction. We slipped and ended just about that 49,390 394 odd levels. But remember, today was also the weekly expiry for Bank Nifty, since tomorrow is a market holiday. So perhaps it could be some bit of a long unwinding that ultimately led to this last hour of sell-off. Not to forget, again, the markets are shut, so there are some key data that will be released tomorrow. So perhaps the investors are repositioning themselves before we go into the holiday. One, we have the auto sales number for the month of April. Now, the expectation is that we'll see a healthy growth on a year-on-year basis. The two-wheeler segment, that is expected to do particularly well, with a healthy 15 to 18% year-on-year growth in two-wheeler sale companies like Bajaj Auto, TVS and Hero MotoCorp. Also, remember the US Federal Reserve policy decision that will come out tomorrow evening, and we'll only get to react to it come Monday. And if you look at the cues, reading the reports and the data, the string of data that has come out since the last decision, I think at this point none of us are expecting a rate cut, especially the big data that came out last week, the economic data for Q1, which indicated slowing growth as well as rising inflation. But what would be keenly watched by the street is what Mr. Jerome Powell had to say. Remember, it was him who pretty much started that dovish narrative after the last policy meet. He was the one who said that perhaps it's time to look at rate cuts, and we can see 3 rate cuts this year. But since then, we have had a slew of strong data on the macroeconomic front, as well as inflation figure has also come in slightly, in fact much higher than what the street was expecting, and that has really shifted the narrative from 3 rate cuts to this year to perhaps no rate cut or even a rate hike down the road. So that could also be one of the reasons why we are witnessing this crash. Joining us on the show now is Amardeep Singh, Senior Vice President of Research at Angel One. Sir, thank you for giving us time here on News 9. And I want to begin with the big one, which is of course the last hour of sell-off. What do you attribute that to? Just good old profit booking ahead of the policy decision from the US Federal Reserve, or is there more to it?
Yeah, I would say that, once we look at the market structure and we look at the way the markets have been trading, so we have to be prepared on both sides. So because we are witnessing bullish sentiments as well as bearish sentiments, as well as moves and a lot of tussle between the bulls and the bears also happening at record highs, and that's a given. Having said that, if you look at the structure of Nifty on the intermediate term trend, that tells me that it's more of consolidation, and higher levels like 22,750, earlier 22,775, that was the all-time high that was taken out today. But again, the markets witnessed profit booking around those levels. And today I would say Bank Nifty expiry also being, so you have to be prepared for this sort of volatility when the markets trade at record highs. Also, if we look at India VIX has risen by almost 20-25% over the last 4 or 5 trading sessions, but that's still not much of a concern because it's within very, I would say, comfortable levels. But the markets also understand, and the market participants also understand, that global cues as well as geopolitical tensions, as well as US Federal Reserve's meeting and the outcome is more or less expected that there's going to be no rate cut. But the commentary is something which markets would also look at as to what the outlook would be. So markets, that's the way the markets are. However, what we have seen is that we've seen a broad-based rally across different, I would say, segments, sectors, and also across different multi-caps. So that tells me, if you look at the advanced decline, despite the correction today from the all-time highs, still the advances have been slightly on the higher side. But But the structure of the markets clearly tells me that it's more or less some sort of consolidation. But if you ask at the long-term structure, the long-term structure for Nifty continues to be very strong. There's no trend change there visible. And also, if you look at stocks which are trading above the 200-day moving averages, or the number of stocks which are trading at all-time highs, or the number of stocks which are trading at 52-week highs, that still continues to be a significant, I would say, factor. So that tells that the broad-based rally is there. But yes, we would witness, or we have to be prepared for such sort of volatile movements that we did see today. We are going to see more of them in coming days and weeks.
All right, the overall bullish structure of the market remains intact, but we will see intermittent corrections along the way, especially considering, the kind of environment we are in. There are geopolitical tensions to worry about. There are also the election season is obviously on, the earnings as well. Plenty, plenty and more for the investors to worry about and maybe reposition themselves. But, speaking on the US Federal Reserve policy decision, as you rightly pointed out, most of us are not expecting the start of monetary easing this time around. But again, the commentary will be keen-eyed. Do you think there will be a hawkish sort of a pivot from Mr. Powell? And if that happens, should we brace for a big correction?
See, overall, if you ask me, you have to be prepared, as I said, for anything and everything in the markets. Because the markets have run up significantly, the structure of the markets remains strong. The stocks also, in terms of the quarterly results, some of the stocks have been performing exceedingly well. But we need to remember that the US economy continues to be, it's just like the sun and all the other, I would say, nations are planets around that. So they have anything major happening in the US definitely reflects on the global markets. Going by the data, in terms of the inflation data, in terms of the US jobs data, in terms of the GDP, still we did witness some sort of negative there. But overall, most of the data points, the trend clearly shows that rate cut isn't very likely. But at the same time, the statement, I would say markets have also factored in now. That's not going to be in June. Maybe it's going to be in the second half. So markets are really wondering on that part. But yes, at current levels, there could be some shakeout, there could be some volatility, there could be some profit booking. So those things are definitely there. So those who are looking at from a long-term perspective, they need to be, if they're looking at one chunk go, then they should be slightly wait for some decent correction to enter into. Those who are into the SIP mode, for them quality stocks is always a way to go, but again on a monthly or a quarterly basis.
So hold that thought. It's time to slip into a short break, but we have plenty more to discuss with you on the other side. Stay with us, please.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching Last Week here on News 9, and before we went into this commercial break, we were discussing what the US Federal Reserve is going to do in its policy decision for the month of May. And from what I understand, Amar is saying that we will not see a rate cut this time around, and the markets may also see a hawkish pivot from Mr. Powell. But if that happens, don't expect a big crash because that has already been priced in. But Amar, I'll come back to you and take it to what what RBI might do next, because this, I mean, if there is no monetary easing in the US, does that delay rate cuts here in India as well? Because we are in this Goldilocks sort of a situation. There is solid growth, inflation is moderating nicely, so RBI could be tempted to cut rates, but then again, cutting rates would further eat away from the spread between the bond yields here in India and in the US, which may again reduce the attractiveness of Indian bonds. They may not want to do that, especially ahead of the inclusion in global bond indices, JP Morgan and Bloomberg later down the road. What's your sense of things? How does RBI navigate this situation?
Yeah, see, we have to understand that no country works in isolation, and also I would say most of the central banks, they would be keeping a very keen eye on crude oil prices, because energy prices are something which they always have to factor in. And the way energy prices have really held firm, we've not seen some sort of correction there. It's more or less consolidation with a positive bias, given what's happening in the Middle East and to a certain extent in Russia and Ukraine. So RBI, and also we are a agriculture dependent economy to a very great extent, so monsoon definitely plays a very important role. So far as it's concerned, expectations are of a normal monsoon, but again, that's I would say still we'll have to watch out for how that plays out. So RBI might take a wait and watch a policy, because the way the heat is also there across the country, the heat waves are across the country. So there could be some concerns there with regard to, I would say, the monsoons or other parts and energy prices. So maybe RBI would wait for some further cues to really take a stance.
All right, RBI will take cues on how the monsoon turnout is. I mean, the expectations from IMD as well as Sky Met is that we'll have a normal monsoon this time around. So that will bode well for us, especially for the rural side of things. Rural consumption is something that is still plaguing our markets. On the other side, crude prices, I mean, they have, it seems that they have topped out for now. 91, 92 is where, from where we have retraced, and you know, we are actually around that $87 a barrel mark. So pretty much trading in that range of $87 to $92 a barrel, but still, you know, if they do bounce back and get beyond $92 and perhaps get to 100, that could be a problem for a net importer like India. But you know, speaking on bond yields, Amar, do you expect the 10-year in the US breaching that 5% mark, you know, which was a 16-year high which we had hit in you know, October of last year? Do you see us getting back there? And if that happens, how will it impact Indian markets apart from the FII outflows, sir?
Yeah, I would say, see, one interesting part is that if you look at all global markets across asset classes, be it equities, be it commodities, to a certain extent, gold and silver definitely being part of that. And equities, be it the Japanese markets, European markets, leave apart the Chinese markets and the US markets. And Indian markets, of course, they've delivered phenomenal returns over the last couple of years. So the investors, the hedge funds, the pension funds, the professional funds, professional fund managers, they've all done exceedingly well. So having said that, there's also some, I would say, on the back of the mind that maybe it's time to be slightly on the cautious approach given the way the US economy is performing. So yeah, in case there is this the 10-year yield breaches the 5% level, then yeah, we could witness a lot of money flow as well as happening, because a lot of money, what happens is that they move from riskier assets to assets which they perceive to be less risky over a period of time, depending upon where the economy is in the overall economic cycle. So these are certain aspects which fund managers and I would say the smart money would definitely be looking at, and because the money that you at times save is also the money that you earn. So the risk appetite and also the future expectations, those are certain things which would play out. And also the US, I would say US is also heading for their presidential elections later in the second half. So that also would be something which would be very keenly watched by the market participants.
All right, and sir, I mean, from this conversation that we have had today, I mean, it looks like there is a high probability of a black swan event happening. You know, the election results are due on June 4th. Let's not forget the geopolitical risk from South China Sea, Middle East, even Eastern Europe, they still remain elevated. I mean, at a time like this, when the markets are also at record high, by the way, how does one manage their risk? How do they make their portfolio bulletproof? Amar, your thoughts?
Yeah, I would say, see, we have to understand that we'll have to live with uncertainty and we'll have to live with volatility. So that's the name of the game. The next coming to the point is that, see, from a long-term perspective, these events, if you look at over a 10-year period, 20-year period, 30-year period, you'll find that events have happened, wars have happened, major catastrophes have happened, unexpected events have happened, and despite that, the markets have bounced back. So the ideal way to look at the markets from a long-term perspective is to focus on quality stocks, diversifying across sectors, and then entering in tranches. So if you like XYZ particular stock or a group of stocks, then ideally you should look at accumulating over a period of time. You'll be far better off compared to most of the other market participants.
Right. All right. All right. So from what I understand, have a long-term view, diversify your portfolio, and maybe have expectations that are actually in line with what the broader trend has been for the markets. And as you also rightly pointed out, so time and again we have seen certain catastrophes taking place, but the markets have bounced back each and every time. And regardless of what happens down the year, if we do see a black swan event, the expectation is that in the longer term, I mean, that volatility will eventually be ironed out over time. Sir, thank you for giving us time here on News 9. We are running out of time here now. Always great insights from you.
Thank you.
Alright, with that, it's a wrap on this edition of Last Week. We'll see you on Thursday morning at 9:45. Remember, tomorrow